Hindustan Unilever is demerging its ice cream business into a separate listed company called Kwality Walls Limited. Currently, HUL has two very different businesses under its roof. Its core FMCG categories across home care, beauty and personal care, and foods, and a completely distinct ice cream division that runs brands like Quality Walls, Cornetto, and Magnum. Now, HUL will separate these into two independent listed companies. One will focus only on the ice cream business with its own cold chain network, distribution model, and brand strategy. The other will continue as HUL's main FMCG business. Now, if you're an HUL shareholder, here's what changes after the demerger. For every one share you currently hold in HUL, you'll get one share of Quality Walls. So if you have 100 HUL shares, you will continue to hold those 100 plus get 100 shares of Quality Walls. The company has set December 5, 2025 as the record date to determine the shareholders who will be eligible for the demerger. Which means if you buy shares of HUL on or before December 4, 2025, you will be eligible to receive shares of Quality Walls. On the record date, HUL will go through price discovery in special pre-open session, which will be held from 9 am to 9:45 am. Now during this session, one can only place, modify or cancel the orders. Order matching happens at the end of the session, while regular trading is from 10 am to 3:30 pm. Also, all existing F&O contracts of HUL expiring in December, January and February will expire on December 4, 2025 and will be introduced for trading again with a revised lot size from December 5, 2025 after the special pre-open session is over. Shares of Quality Walls will be listed separately on the NSE and BSE, and they'll begin trading once the shares are credited to shareholders' demat accounts and the stock exchanges complete the listing process. This typically takes 30 to 45 days from the record date. Since HUL is a major index component, the timeline may be shorter. You'll get an email from CDSL once the shares are credited. When a company goes through a demerger, it's basically splitting one business into two or more independent parts. Now this doesn't change the total value of what you hold, but it does affect the average price of your holding because your investment now gets divided between the separate companies. The average price is adjusted based on the cost of acquisition ratio announced by the company. While HUL hasn't yet announced the cost of acquisition, here's a hypothetical example of how the average price will be adjusted for your holdings. Let's say you bought 100 shares of HUL at 2000 rupees each. Your investment was 2 lakh rupees. After the demerger, let's say the value splits 80:20 between HUL and Quality Walls. Then your adjusted average price will be roughly 1600 rupees per share for HUL, which is 80% of 2000, and 400 rupees per share for Quality Walls, which is 20% of 2000. The combined cost remains 2000 rupees. It's just divided between two stocks. For taxation, the acquisition date of Quality Wall shares will be the same as your original HUL purchase date, so the holding period continues from when you originally bought HUL, not from the demerger date. Tax will apply only when you sell the shares. Long term, that is more than 12 months, taxed at 12.5% on gains above 1.25 lakh rupees. Short term, that is less than 12 months, taxed at 20%. If you have any questions about the demerger, post it on Trading Q&A. You can check out the link in the description.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing. Brokerage will not exceed SEBI prescribed limits.